Hey guys, Mike here. So another interesting day in the market where we were green, then we went back red at the end of the day. So bears are still trying to push it down, but we are coming close to key levels, certain moving averages, especially some big mega cap stocks. We're going to look into that. It's always funny when we're moving up. You don't see downgrades. Now all of a sudden you're seeing weakness. You're seeing more downgrades. You're also seeing news come out that didn't affect the markets when they were on the way up, but now there's selling pressure. They really affected, right? So that's what's happening right now. And, I will say one thing. There's this place, I just want to say this, I'm in Alabama again, for those who are new, at my mother-in-law's house, just visiting for the week. And we're in a small town, and there's this place, it's called Unclaimed Baggage. If you run an e-commerce site where you buy stuff and then resell it, like this is the mecca, okay? This is where literally all unclaimed baggage or lost luggage from the airports come to this one place. And so you see everything, stuff you would never think you would see. It's there. It's amazing. I could not believe it. I mean, you could spend all day in there. They literally trucking people in buses to come to this place. And so if you got one of those places, and look it up, unclaimed baggage is what it's called. You would have a field day and make a boatload of money because they have everything you can imagine in the sun for great prices. Now, remember, what we've been talking about for weeks. What's the rally all about? It's all about the Fed cutting rates. It's all about this soft landing narrative, all this good stuff, right? So what all of a sudden you've seen, because March is supposed to start rate cuts. Remember the Fed, we had FOMC minutes yesterday. They're not even talking about rate cuts, not until maybe mid-year, late year. But the market's pricing in one for March. And so, of course, now you're seeing all of a sudden, here's JP Morgan clients saying, oh, maybe we're a little early on that one. And so, of course, this is the Treasury net long positioning versus the 10-year yield. You can see a big drop right there. You can see also the net long price change, that dropped, biggest one since 2020. No surprise there. And understand the reason why, because the Fed has only pulled this off twice, okay? And you can see all the little dots in there. So you can do the percentage for yourself. So it's not an easy thing to pull off without having us go into a recession when they go through these rate hiking cycles. And so again, it was what, 95 or 97 right there, and then 85, I believe, as well. Was the only two times they've actually pulled this off. Now, of course, we talked about this. Who's been the biggest buyers over the last 12 months? Not even close. It's hedge funds. Right? Hedge funds can take on a lot of risk. Institution, which is like pension funds, things of that nature, can't take on as much risk. So what they've been doing, they've been locking this stuff up and getting that 5% for their clients and everything. And then, of course, you got the private clients, which is the rich folks. They're definitely locking in, the money markets, the CDs, the treasury bills, all that good stuff, right? And so when we go into the market, what are we looking at here? This right here is the 21 moving average. This is something that needs to hold. It held 2 days. This is where we got the bounce before it started to go red. But again, below that is going to be that key level we talked about, which was July's highs, 4,600 on the S&P, 460, I believe, somewhere around that on the SPY. And you can see the reason why we got the bounce initially is because we were just oversold, right? You get oversold, tend to have a bounce on the shorter term time frames, and that's what happened. All right, now again, here's the level you want to watch on the S&P. And of course, one reason this could be absolutely possible to hit is, one, we're only 2% away from it, but it's also what's going on with Apple again, the news that came out about Apple, which we'll get into in just a couple of minutes. And so watch that level for sure. That would be a great bounce level, by the way. If it broke that, we'd be having a whole different kind of discussion here. But, like we said, and you move down right there, it's a little bit of support, right? I'm going to say there's a great support right there. Not like below there, there's even better support. But when you look, here's what's going on the Qs as well here. And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. Well, what you have is 5 straight days of redness after 9 straight weeks of moving up, right? And so you got good support coming up there around 392, right in that area, 391, 392. That will be good support if we continue down there. You can see it right there. Again, you see the MACD trying to roll over. But guess what? 9 straight weeks up, this is going to happen, okay? There's no ifs, ands, or buts. It's the first red week in 10 weeks. Can you believe that right there? And so it doesn't happen very often. And yes, you get a sell-off. So again, 391, 392, that's weeks of consolidation. That breaks probably around like 389, 390, right below it. So again, that's not too far off. And so we'll take it one level at a time. We're looking at this because we don't know how far they're going to push us down, right? And it really does depend on the Mag 7, a lot of this, right? Because you're seeing what they're doing to Apple. And if we came down to that line, that's 5% down. That would be a blessing in disguise as far as buying for sure for 2024. Don't think we're going to get that far, but who knows? Now, IWM sitting right there, we talked about, right? Setting that trend line, filled that gap, and now what do you got below? A big old fair value gap. And we're in a volume gap as well to the right. And so are we going to get the bounce off the trend line, which we bounced off, 5 times now? Or are we going to come down and try to see if we can get a reaction off of that fair value gap to start moving back up? And I'm going to show you a chart, which will show you what I'm talking about when I say a reaction. Okay, because that's what you're supposed to see. If it cuts through that fair value gap, then we're heading much, much lower. But again, moving averages got stretched, or it got stretched away from the moving averages. So now it's having the rubber band effect. And so again, let's see how far they want to bring this one down. Now, Apple, what happened? Another downgrade today, right? They smell blood in the water. So guess what? We're going to go ahead and downgrade you while you still have a lot of weakness going on. But what do you got coming up? The 200 moving average and that trend line we talked about, which goes back to like 03, somewhere in there. And so again, when you're looking at this one, the 200, you can see multiple reactions, or at least kind of reacting right below it right there. So that's going to be a good area to see. We'll see if they can actually push it all the way down there. They start to go ahead and move it back up. But you can see when it was moving up, bounces off it multiple times. When it was in a downtrend, got rejected off of it multiple times. So it definitely respects the 200 moving average. And again, don't forget, Apple is the most bought up or owned stock in the whole world. So, and what's cool is if you pull up a Fibonacci tool, you can see right there, we're at the 50 now, but that 200 is right there around that golden pocket area. So that would be a fantastic bounce area for Apple. And if it can start to move up, then the S&P will have a chance to get all-time highs pretty quickly if you see a lot of strength in Apple. Now, again, what else we got? It's getting into oversold territory, but be careful because you can see right here, it got oversold and it sold down. I think it was another like 5% after that. It just stayed oversold. So that could happen right here. But again, we are getting close to that 200 and that trend line, which goes back to 2003. So let's kind of keep that in mind. It would be a great place for a bounce on Apple. Now, looking at Tesla, we can see we talked yesterday about that trend line 100 being resistance. And that's exactly what happened. It got a bounce. Got up that trend line to 100, got rejected, and then just trailed and kept bouncing off of it for like 2 hours straight, then finally sold off a little bit at the end of the day right there. Did not reach the prior day's low, of course. Again, the levels to watch, 233 is good support. Right below it at around 229 is a 200 moving average. I would be surprised if we broke both of those for sure. But again, it's going to take some decent, call sweeps start rolling in, some dip buyers to push us through that volume gap right there, which you can get around 247, 248 maybe. And then it's definitely going to be some trudging trying to get back up through there for sure. But, I mean, it's Tesla, so we know this thing can move violently in either direction. Right now, the bears have control in the short term. Let's just see what the bulls do. Now, Amazon, this one right here was weak today because TikTok came out and said they're going to start a new e-commerce site. And so people said, oh, no. And so they sold it down. It hit that 50 and that trend line right there we talked about, I should say support line, which we have bounced off of as resistance and then just basically built out a support level on. So around 145.95 right there. We'll see if that can hold. The RSI is in no man's land right now, so this could continue down through there to the 100 moving average, depending on how far the bears want to take us down. And when I say bears, I mean big money for sure. If we do finally get the bounce, don't forget that trend line, ascending trend line, will be resistance right around the 150 area now. So just another level of resistance for it. But again, this is one of those ones where they have picked this out to be a big stock for the year just because of the cloud, e-commerce, things of that nature. Now, when we look at Netflix, this is the one I wanted to show you. This is a perfect example of what I'm talking about when I'm talking about fair value gaps and the reaction. See that right there? It's a weekly fair value gap. So these hold a lot of water, okay? A lot of power. You can see it rejected off that first time over there, and it rejected off 2 times after that level right there, okay? That's what you want to see is a rejection, okay, off of it when we're moving up like that, some kind of reaction. Again, if it cut right through it, that means we're going up really fast, right? Now, what's cool is when you spot these, pull your fib level from the top to the bottom, and you can see what is that level. That is the golden pocket level, 615 to 618 is what I call the golden pocket. And you can see that's where the rejections normally happen. Sometimes they'll happen at the 50 as well. And so either way, those are the levels you're going to be watching at. And Netflix, I mean, do I expect to sell down the trend line? It might. I mean, you got your 100, your 50, the 200s right there. So Netflix is not in any trouble to take any like major dives that I'm aware of for sure, because they got plenty of support and everything. But when it finally does mitigate that fair value gap, what's right above it to the left again? You got more. So you get to see if you get more rejections. So don't expect some blast off of Netflix to go to all-time highs again. It can keep trudging up. As long as it's setting those higher highs and higher lows, it's good to go. Now, economic data, a lot of it coming out tomorrow. Okay, we got all the average hourly earnings. We got the government payroll, non-farm payrolls, and then the unemployment rate, which they expect to increase to 3.8%. Don't forget, this is a lagging indicator. So again, 3.8 is nothing. You're looking at something like 4.1, 4.2 for people to start to raise their eyebrows for sure. But then you got a whole lot of factory orders and then ISM services data coming out for new orders, employment, business activity, PMI, prices. And so that will definitely affect the markets after the market opens. So be careful on that there. Plus, it is Friday, right? So we have weekly options, expiration, everything. And again, bears are still in control. You're looking at 9 weeks up. When you look at how much we sold off, it's not really much. I thought what was interesting is when you're looking at rotation. Well, today, some of the high beta stuff came back, right? What was it yesterday? It was healthcare, utilities. Some of the Mag 7 was up. Still, semiconductors are getting hit. I'm trying to think of the name of some name of the company, Mobileye or something that came out today. Got hit like 30%, I believe, and so it just took all the semis down with it as well. Again, I don't know much about that stock, but that's what I read this morning. So maybe that's what was affecting that. But we'll see how far they want to take this down. I'm not. Again, we're going to take it one level at a time. Just that easy. Okay. I mean, I'm putting out a members video now for like the sectors I'm looking at, maybe some levels I'm looking at and everything like that. But, for the 2024, I'm looking at the big picture view, not some week or two or anything like that. I mean, we all expected that at some point in time we would get a pullback. Now you just got to figure out what your levels are and what stocks or, ETFs you're actually buying and stuff and willing to DCA in it and all that stuff. So, and again, I mean, it's all kinds of weird because we got a Bitcoin ETF. They could get approved, multiple of them tomorrow. Everybody thinks it's going to be a sell and news event. Put in the bottom if you think that as well. And so you're going to have money flowing in there or flowing out, depending on how you look at it and stuff. So it's definitely going to be fun times going on tomorrow and then going into next week as well to see if we finally start to move back up or at least to start to consolidate. That's really what you want to see is a consolidation and stuff. So anyway, I don't know if we're going to be on the road tomorrow or Saturday. We hadn't decided. So if you see a video, I guess we wasn't on the road. If you don't, then I'm on the road back, and it's like a 6 to 8 hour trip, depending on how many times we got to stop with 3 kids and 2 dogs. So that's kind of a long trip when you're up in the mountains, especially. So anyway, hope you guys got something out of it. Hit that like and subscribe button, and I'll see you tomorrow, hopefully.